Hi. In the context of Forex or stocks trading, a pin bar is a configuration of Japanese candlesticks that indicates a possible trend reversal. It forms when a candle has a very long wick compared to its body, which is usually small. The candlestick looks like a pin. Traders use pin bars to identify key support and resistance levels, as well as to confirm trading signals such as Fibonacci retracement levels and trend lines. Pin bars are considered reliable signals because they often indicate a strong trader reaction to a particular price level, which can lead to a short-term trend reversal. Let's see how to measure the strength of bullish and bearish candlesticks, depending on how the candlestick closes. The stronger the closure, the stronger the confirmation. When the session takes place mainly in the upper half of the candle, it means that buyers are in control. The higher the body, the stronger the confirmation of an uptrend. If, on the other hand, the body is in the middle of the wick, it indicates indecision. Conversely, when the session takes place mainly in the lower half of the candle, it means that sellers are in control. And it confirms the downtrend. And if the body of the candle is in the middle, there is indecision again. Here is a summary with all types of pin bars. Thanks for watching.